Across the borders in the world of business, the Japanese government will allow 7 of the nation's major power companies to raise household electricity prices from June, a move that will support corporate earnings while adding to inflationary pressures. Prices hikes by the companies will be between 14% to 42%. Here now are the details of this and other stories making headlines across the globe.
Companies in the resource-can nation have been hammered by last year's global energy crisis as costs for importing fossil fuels surged. Japan believes high electricity bills would boost upward momentum in prices as the Bank of Japan keeps a close eye on inflation amid expectations it will adjust policy as early as this summer. The power hikes could raise inflation by as much as 0.42 percentage points. Japanese utility shares jumped on the measure, with Tokyo Electric up as much as 3.9%. Government subsidies scheduled to expire in September are currently holding down electricity prices for households by around 20% as Kishida tries to relieve the pain of soaring inflation. Elsewhere, Vodafone has outlined plans to cut over 11,000 jobs over the next 3 years. The cuts equal more than a tenth of its workforce and will affect its UK headquarters and other countries such as Germany and Italy after reporting a small rise in full-year sales and a fall in pre-tax profits. Vodafone announced the job cuts after reporting a small rise in full-year sales to 45.7 billion euros and a fall in pre-tax profits. The company has forecast earnings will be broadly flat for the current financial year. Vodafone's former boss, Nick Reed, who stepped down in December, had plans to achieve around 1 billion euro of cost savings at the telecoms firm and signaled that job cuts were likely. Finally, the Polish economy will expand by 0.6% in 2023 and 3% in 2024, the European Bank for Reconstruction and Development has said in its latest forecast. In its Regional Economic Prospects report for May 2023, the European Bank for Reconstruction and Development said Polish economic growth in 2023 and 2024 will be below last year's. The European Bank for Reconstruction and Development said the Polish banking system seemed resilient, but in the long term, the unresolved issue of Swiss franc-dominated mortgages was a reason for concern given the large private sector investment needs.